Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HF Markets, and I'd like to welcome everybody to a live analysis webinar. So, of course, today we're going to be looking at the major event today, but also a preview for the upcoming event, the major event of the month, the key price driver, and that is, of course, the CPI, the inflation that we're going to see announced next week. Now, why are we here, though, ladies and gentlemen? It's not a webinar where we're going to be looking at a presentation, going to be looking at a specific theory, a specific strategy. Today, we of course have a major event. We're about to have a lot of volatility. There's going to be a lot of opportunities within the market. So we want to understand what are the signals? How is the price potentially going to move? What type of volatility we're going to see? Where potentially can we put our targets? So this is what we want to understand because there's about to be a lot of volatility, but I want to know how to trade it. So, yes, we're not going to give investment advice. Yes, we're not going to go into the chart and I'm going to say, guys, buy here. This is your target. At this point, we need to start selling. We're not going to do that. But what we're going to do is to ensure that everybody understands how the market is driving the price. Because we are able to predetermine how the price is likely going to be driven, then it's at that point that we can successfully take advantage of different opportunities within the market. So, of course, this is what we want to understand. A bit about my background. I originally started off actually as a financial advisor. That I did in London for 4 years. I've been a market analyst now for also 10 years. So I've been in the market for 10 years. I'm a licensed financial advisor in both Europe and also the UK. But like I said, what we're doing today is that we want to look at the market and determine how the price is likely to move. How can we understand what kind of sentiment we're going to see, what kind of targets we can potentially look at, where there's signals, and exactly what are the signals telling us? Are they telling us at which point and for how long they're going to be trading in a specific direction? This is, of course, what we want to understand. And in order to understand this, and by the way, ladies and gentlemen, we do market analysis blogs every single day. And if I go to blogs from 2 days ago, 3 days ago, we talk about this every single day. And I confirm different signals, for example, looking at the high-low index, for example, looking at the VIX index, confirming to everybody what kind of sentiment there is within the market. And we always give, compared to this, we always give an entry. We always give a signal. So, for example, we can see a signal here from 3 days ago. Based on that, it's definitely 100% in the profit. Why? Because this was from 3 days ago, as you can see here, the 5th of, 2 days ago, the 5th of June, and we can see that's in a profit. If we go to yesterday, again, there is a signal there, ladies and gentlemen. We confirm why there's a signal. We can see here, again, we are in a profit. For example, here, look at this. 88% of the NASDAQ components are increasing in value. And exactly why we're looking at these webinars, these live analysis, so we can get an understanding of how financial advisors, how fund managers, how professional traders view the market in order to get a good bias about how the market is, of course, likely to move. This is what we want to get a good understanding of. So, for example, here in yesterday's analysis, we were looking at the components, and I can explain this. If you go to the Google and you type in NASDAQ components like this, go onto the first website, ladies and gentlemen, here. What it actually is going to do is give you a list of stocks. Now, when we're looking at a list of these stocks, ladies and gentlemen, you can see that they are ranked, they are numbered. Now, what this is basically telling us is which stocks are the most influential. And what we want to look at is, these most influential stocks. So, for example, in yesterday's analysis, I was focusing on all stocks which have an exposure of at least 1%. So, for example, here is 0.99%. I'll include that. So, for example, we're looking at the top 25 stocks here. And basically what I'm looking at is what percentage of these stocks are increasing and decreasing in value. So from 25 stocks, we have, for example, 1, 2, 3, 4, 5, 6 decreasing in value. We have 19 increasing in value. So if we do 6 divided by 25, 24%. So we've got 76% today of the NASDAQ increasing in value. 76%. That's a very large percent, ladies and gentlemen. And if we look at the top 10 most influential stocks, it's an even higher figure. There's only two stocks which are decreasing in value. That's Tesla and also Nvidia. Nvidia, keep in mind, there's going to be a lot of volatility because, of course, we're going to have the stock split as well. But even based on that, we're looking at 80%. Okay, so we can see here, looking at the components are doing very well. So that is in line with a potential buy bias. Okay, so this is one thing to take into consideration. Though the other thing we also need to take into consideration, ladies and gentlemen, is, for example, bond yields. All investors always keep an eye on bond yields. If we're looking at bond yields at the moment, we're trading 0.02% higher. Now, normally when bond yields are higher, it's an indication that there's going to be pressure in the stock market. To be honest, though, at the moment, it's not significantly high. It's only 0.02%. So at the moment, it's not really giving us an indication that there's going to be pressure or support for the stock market. But what this is going to do, ladies and gentlemen, is as soon as the announcement is released and we've got the non-farm payroll announcement, it's at that point that we can go back and look at this to see, now the announcement has been made, where are these large investors? So hedge funds, fund managers, the large institutions, where are they driving the price? Because if we can determine that, then we can start looking at targets of where the price is likely going to be driven to. Now, some figures I want people to also make a note of, and I've got some questions, and I definitely will look at these questions before the non-farm payroll figure is released. A lot of people mentioning gold. Of course, we will 100% look at gold. So actually, the first asset that I'll look at when we go to the MT5 is gold. And we'll look at signals, we'll look at indications, we'll look at price action, we'll look at targets, we'll look at stop losses. We'll make sure everything's 100% covered. But before I look at that, let's look at this, ladies and gentlemen. This is very simply a pie chart, okay? And it's given us an indication of whether we're looking at a risk off or a risk on appetite. Now, at the moment, ladies and gentlemen, we actually have a slight risk off appetite. Now, some people may be saying, why do we have a risk off appetite? Because number one, ladies and gentlemen, most of the chart is red, okay? Number two, if we're looking at European stocks, ladies and gentlemen, we can see the Euro Stocks 50 is declining. We can see the DAX is declining. We can see a lot of European stocks declining. Somebody's mentioned here, what about the French CAC? I don't think the CAC is actually included here. No, the CAC isn't included here. But the French CAC, which is the second most influential stock for the for the Eurozone. Bear with me. Let's see. It's also declining. So you can see here it's also declining. So we've got most of European stocks declining, ladies and gentlemen. We've got the DAX, we've got the French CAC, we've got the Stocks 50 declining. Now, in addition to this, the VIX, which is used as a sentiment indicator, if it's significantly higher, then it indicates that there's a low risk appetite. So, of course, that's negative for the stock market and is perfect for things like gold. Okay, now though if we're looking at the VIX, what we also need to take into consideration is that it has been declining for a very long time. So the fact, ladies and gentlemen, that the VIX is trading slightly higher isn't giving me the greatest accuracy because it's been declining for a very long time. So the fact that it's slightly high, 0.33%, not massively high, it still means that I need to be cautious. I'm going to keep that in mind. I'm keeping in mind that most of this is red. I'm keeping it in mind that the VIX is also higher. If we're looking at safe haven assets are kind of 50-50 to an extent, ladies and gentlemen, because we're looking at gold. Gold is very low. If we're looking at, for example, the US dollar, let's find the US dollar here, ladies and gentlemen. the US dollar here. The US dollar is more or less unchanged, it's trading 0.03% lower. So the fact that safe haven assets are also significantly declining is also telling me, don't give too much attention to the VIX just yet, because the VIX, like I said, if it's high, it's giving an indication of low sentiment within the market. We can also look at other indexes that gives us indication of sentiment, because one of the biggest drivers in the market is sentiment. We cannot get away from that. A lot of people, they don't look at sentiment because they don't know how to look at it. A good example of how to measure sentiment is the bullish percent index. This is a very good index that people can use to get an understanding of what kind of sentiment is within the market, risk on, risk off. People can look at the the high low index. The high low index, again, very, very high, which is giving us an indication of strong sentiment. The VIX at the moment, slightly low, nothing major. If we're looking at this morning, by the way, guys, it was also at plus 1%. So again, plus 33%, really not something that I'm giving too much attention to just yet. If we're looking at the NASDAQ and the S&P 500, both are trading higher. They've definitely both improved over the past 1 hour or so, especially the last 30 minutes, because I can remember closing some trades at a take profit. I haven't looked at the charts in the last 10 minutes since we've started, but we're going to start looking at the charts now. Now, the other thing I want people to also keep an eye on is after the non-farm payroll has been released, look at what the possibilities are of interest rate alterations. Because at the moment, we've got no possibility that next week they're going to change interest rates, the Federal Reserve, that is. If we're looking at July, there's a very, very low percentage, only 22% that they're going to decrease interest rates. If we're looking at September, that's where we're seeing the most probability that interest rates will actually decrease. But what we're noticing is, for example, this, if we go back 2 weeks ago, this was at 35%, ladies and gentlemen. And if we go back just to Monday, if we're looking at the possibilities for June 31st, this, ladies and gentlemen, was only at just under 10%. So we can see the possibilities of an interest rate cut in July are increasing, and if not in July, because yes, economists are saying it's going to be September. If not in July, then at least in September it's becoming more concrete. Now, if after the non-farm payroll figure is released, that it becomes a higher possibility, then it is, ladies and gentlemen, at that point that yes, okay, interest rates are going to start. After the non-farm payroll figures released, we come back to this. And if this 22% is increasing, then this is massively positive for the stock market, because that's going to start being priced into the market. And at the same time, it's negative for the US dollar, and it's also negative for gold as well. A lot of people think that gold and the US dollar is inversely correlated. Yes, of course, it is 100% accurate that it is inversely correlated. But, ladies and gentlemen, we have to take into consideration that they're both safe haven assets, both in that safe haven current category. So we have to keep in mind that sometimes they can be correlated and move hand in hand. Now, a lot of people are writing comments and questions about what type of what type of announcement is going to support the support the USA 100, so the NASDAQ, and what announcement is going to support gold. Now, within regards to gold, ladies and gentlemen, at the moment is not so much being priced based on the US dollar and based on sentiment within the market. It's actually largely being driven by three countries. It's being driven largely by China, by India, and by Turkey. Why? Because of the scenario with their currencies. And in addition to this, they're looking to mitigate the risk of, for example, Trump becoming president again, in which case it's a big issue for these countries, in which case they're trying to mitigate the risk of that. And the answer to that, ladies and gentlemen, is very simply gold, which is also always going to be that hedge against inflation, that safe haven for the currency, and backing up their currency as well, which is extremely important, specifically also for China, because China over the past 3 years is actually the fourth most traded currency, ladies and gentlemen, which isn't that much spoken about, to be honest with you. Now, in regards to what is going to support the NASDAQ today, in the next 4 minutes, ladies and gentlemen, we've only got 4 minutes, so let's look at this. What I've said over the past 2 days has been extremely successful, and the same scenario applies today. I said on Tuesday, and I said on Wednesday and Thursday. We're looking for that very thin silver lining. There's a very thin line between the economic data being so bad that actually we're in risk of a recession, economic contraction, because we have to keep in mind that employment is one of the most lagging indications. It is the last thing that will decline. So if there's a very good saying that if employment is declining, it's too late. Okay. So we don't want the employment data to be so bad that it's going to risk a recession. Because if it is so bad, then the NASDAQ can decline. Gold can potentially increase in value as well because of that very quick switch from a risk on to a risk off appetite. At the same time, if it's significantly positive, it can cause a retracement in the stock market. Yes, the signals in the longer term for the stock market will still be bullish, but it can create a retracement in the stock market. Most likely after that, people will re-enter and push the price back up in forms of correction because they want to take advantage of the lower purchasing price. But the US dollar will increase in value and gold will also decrease in value because people will be more interested in other assets, again, such as the stock market and also the US dollar and other currencies as well, to be honest with you. So there's that very thin line that we want to see, data which is not bad enough to lower risk appetite, but at the same time not good enough to keep interest rates higher for longer. For example, the scenario becoming that actually interest rates are going to be cut in November or December. So what's an example of this? Because somebody I can see here, there's quite a lot of people here saying, give us an example of this. A very good example is, for example, the non-farm payroll comes in slightly higher than expected. So, for example, it comes in at 190,000, but the average hourly earnings is much lower. So, for example, zero rather than being 0.3%, it comes in at 0.0%. Somebody here says nobody can predict the non-farm payroll figure. Yes, 100%. Nobody can predict it. This is why we're waiting for it to be released, and we're going to go straight to the charts and look at signals, targets, indications, and technical analysis. So, for example, unemployment rate remaining at 3.9%. Non-farm payroll coming in, for example, at 190,000, which is positive, but the average hourly earnings coming in at 0%. This is just an example, ladies and gentlemen. This is a great example of what's something that can really, really support the NASDAQ and the stock market. And that also potentially can support gold, which has been declining. And there's a very strong possibility that people will look to take advantage of the fact that gold has been declining over the past 3 days. So, ladies and gentlemen, we've only got a few seconds left. And then, of course, we'll look at what type of price movements we're going to see in the market. So we're going to refresh in a couple of seconds, ladies and gentlemen. Remember what I've said about, because a lot of people are asking about the NASDAQ, the S&P 500, a lot of people on gold as well. There, to a certain extent, can be a correlation there. Not because there's a guaranteed correlation between the stock market and gold, but very simply because they're both strongly affected by sentiment. So, ladies and gentlemen, let's refresh very quickly. Everybody's refreshing. Let's see what's going to be announced, ladies and gentlemen. So let's go to filters. Let's remove everything. Go to the United States. Make sure it's medium and above. Let's filter. And let's go to today actually as well. There we go. So non-farm payroll figure, ladies and gentlemen, is not coming slightly above. It has come in massively above, ladies and gentlemen. Average hourly earnings. Look at salaries, ladies and gentlemen. Salaries are much higher. So this is a completely different scenario. This is, ladies and gentlemen, stocks going down, US dollar potential increasing in value, and also gold, ladies and gentlemen, just shooting down again as well. So this is potentially what's going to happen to the market, ladies and gentlemen. Of course, we're going to go on to the charts now. Very quickly, let's go through this one last time. Non-farm payroll is coming at almost more than 90,000 more than expected. If we could get quick and look at previous announcements as well, you also will notice that it's much higher than the previous month as well. So a lot of strength there. Average hourly earnings, very high. It's coming higher than expected as well. Again, if we're going to look at previous earnings, for example, we can see the previous earning here, 0.2%. It's much higher. A negative, though, ladies and gentlemen, something which can potentially cause a correction upwards, and we have to be cautious about this because, like the first thing I said in today's webinar, if it declines, investors will see and try to take advantage of the decline, ladies and gentlemen, to very simply enter the stock market at a lower price. So we need to be cautious about this because the unemployment rate at 4%, that's the highest that we have seen it in a very, very, very long time, ladies and gentlemen. So yes, non-farm payroll, very high. Average hourly earnings is very high as well. If that alone, ladies and gentlemen, that can really put a lot of pressure off the Federal Reserve for them not to consider an interest rate cut, or at least not consider it in July, but rather consider it in September. But something potentially which is positive and can really tempt investors. You know what? I will buy at the lower price so I can enter the NASDAQ. Is the unemployment claim. So the unemployment claims here, ladies and gentlemen. So let's go. We haven't looked at gold. We haven't looked at the NASDAQ or any asset just yet. Here we've got the NASDAQ. Let's actually go to gold though. Look at gold, ladies and gentlemen. This is the 2-hour chart. This is gold. It's significantly declined. It's gone back to the previous pricing. We definitely have indications here, ladies and gentlemen, that the price is going to decline, but that the price now will find support. We've been getting indications that the price is going to decline since the price up here. It's declined already since then by 1%. This is a very large impulse wave. Traditionally, this is higher than we tend to see without a retracement. So there is a good possibility there, ladies and gentlemen, that the price is oversold, even though the price isn't getting any indication of being oversold here. Now, if we are going to start to target, because we trading below the 100 bar exponential moving average, we also trading below the 75 bar exponential moving average, and we're trading below the oscillator as well. If we are going to target buys and we're going to look for the price to increase in value, we're going to target between these two levels here, ladies and gentlemen. So between our sentiment lines. And there's a good reason for this. Look at the last time we were at this level here. Where did it reach? It reached that 75 exponential moving average. The next time we went to this support level, again, we reached the same level again. So if we're going to look at buying the dip to take advantage of the correction upwards, which isn't necessarily a bad thing, it depends on individual's approach, because it is very low, ladies and gentlemen. We've retraced from those highs. So is investors, especially these countries, India, China, and Turkey, which are really making a large bulk of the demand, are they going to start to buy? Even in the past few minutes that I've been speaking, it's retracing upwards. We can see here. This is an area to potentially aim for, ladies and gentlemen. But the sentiment in terms of momentum indications is that the price is going to decline. But we cannot simply look at that. We need to look at the overall pricing of the asset. And also, if we're looking at especially this target here, so if I remove the second target, especially this target here, ladies and gentlemen, that's really at that average price of that previous price range, because we've been in the price range now, ladies and gentlemen, other than this breakout here. We've been in the price range up and down between those two levels for a couple of weeks now. So also that target is the average price. So also people looking for that mean reversion strategy. That's a good example there, ladies and gentlemen. Now let's look at gold on a smaller time frame. Yes, for sure, the indications is that the price is going to decline, like I said, but the price, since we started talking, it's already corrected back up by 0.31%. So it's short-term traders, scalpers, they're already hitting their take profits most likely if anybody's looking to buy that dip. Again, if we look at shorter term, for those investors looking for shorter term targets and they're looking to buy, then we've got our target here, our sentiment line. But ladies and gentlemen, this very simply is giving us an indication that the price is going to decline, the price of gold, that is. How are we going to get a further indication that the price is going to decline? We can very simply draw out Fibonacci levels here, and if we decline, which we just decline below it, the 61.8, ladies and gentlemen, that will give us an indication that the price will continue to decline, and it also will give us certain targets as well down here. So we've just got an indication here, ladies and gentlemen, that the price is going to potentially decline. So we're looking at different targets. So first target 121.6. That's 0.24% profit. The next target, which is a lesser known target, but we can take it into consideration, 138, a very well-known target at 161, and at 0.37%. So we're currently within an indication now that the price is going to decline. It has to maintain below that level, ladies and gentlemen. The only thing we need to be cautious about, like I said, of course, is that the price isn't oversold. We're not going to get a correction upwards. If we do get that scenario, then like I said, if we're looking at more short to longer term, we have our targets here. If we're looking at more short term, we can look on the 5-minute chart here, and we've got our target here instead. Beside that, though, ladies and gentlemen, the signals in terms of momentum indications is that gold will decline. But we have to be cautious that we're really at that psychological level. Look at this psychological level. That's definitely a support area, ladies and gentlemen. So, somebody may say, it's very low. We're at a support point, but momentum indications are indicating a decline. So what do I do? If I do want to speculate the decline, because we're at that support point, we can look at shorter term trades potentially, and we can potentially also look at closer take profits. This is an option. Of course, and somebody may have a different approach, which is absolutely fine. We can look at an option of two and look at two different directions. We can look at potential hedging as well, in which case, we hit that first take profit as the price declines, but then we're going to look at a correction back to our mean reversion point and our 75 bar exponential moving average, the 100 bar simple moving average as well. So this is in regards to gold, ladies and gentlemen. Somebody says, can we repeat the signal? Yes, like I said, in regards to the downward price movement, we drew a line between here and here. Very simply, as the price declined, if it's going to decline, let's go to a 1-minute chart actually. The price is going to again decline below 61.8. Then we're looking at an active sell signal. In regards to when we're going to get a signal for the price to increase, we can, instead of looking at a Fibonacci level like this, we can use the Fibonacci level on the high and the low of the most recent candlesticks, in which case if it's going to increase above 161.8, then we're going to look at indications of upward price movement, for example, for a full correction back at the 100 here. So this is something people can take into consideration. Now, a lot of people asked about the NASDAQ. I did say that, the very strong non-farm payroll figure, the average hourly earnings, which was very high, that's definitely negative for the stock market because that can apply upward pressure for inflation. That has caused a decline. We're currently at the lowest price that we have seen in 2 days now. We've slightly retraced. Like I always say, if we're going to retrace upwards, ladies and gentlemen, we can use that Fibonacci levels to enter a further trade. So we've actually got a price gap as well. That gives us a very clear indication, guys, of how much volatility there was within the market. So we've got a price gap here, ladies and gentlemen. Actually, the price gap is measuring 0.33%. Now, a lot of the time when we get a price gap like this, we actually get a correction. If people do want to look at a correction, and there's no signs of a correction just yet, very clearly we're looking at signs of a price declining. But when that does come about, if it is going to come about in the next few minutes, then we can look at a correction to this level here, which is a significant level. Could be a support being flipped onto a resistant level. And again, if we're going to see a signal like that, we're looking at a take profit of 0.31%. So short-term intraday trades, that's a lot of profit, ladies and gentlemen. A lot of people are going to say to me, how much momentum do we need to see in order for that to happen, to get that signal of upward price movement? Very simply, we need to follow the price like this. If it's going to hit that 61.8 and above, so for example, if we go slightly above here like this, then that's an indication there, okay, that we're going to get an indication of correction. At the moment, though, ladies and gentlemen, very clearly the indications is that the price is going to decline. A lot of people are going to cash in, for example, because a lot of people are going to be are in profit from the very strong upward price movement that we've seen over the past couple of weeks. So, for example, if we're looking at MACD bars, we can see they're negative, below neutral. We can see they're enlarging lower as well. The latest price movement on the stochastic oscillator is a downward crossover. So you can see the blue cross is downwards here. And we're very clearly looking at a downward slope. So you can see that as well as an option, ladies and gentlemen. Indications at the moment, like I said, of course, at the moment is indications that the price is going to decline for the NASDAQ. The only thing though, like I said, and I'll say it again and again and again, as the price declines, we really need to think about at what area are investors going to look to re-enter the market. Okay, so for example, here, if we're looking at the mean reversion level, or especially if we've got people that have access to, for example, volume profiles, which is a very strong tool that can be used, this is going to be a very strong point here, ladies and gentlemen. So if the price especially is going to decline back to here, then, how low does it need to decline in order for sentiment and also for sentiment and investors to want to re-enter at the lower price to take advantage of that, ladies and gentlemen. Let's look at the price performance of the market. Since that, we can see 90% of that is low, ladies and gentlemen. 90% of it is low. The VIX is still high, which indicates low investor sentiment. The US dollar higher as well, so indications there of higher interest rates. So that's definitely something to keep in mind. If we're looking at now, if we're looking at bond yields are much higher now. So again, a lot of pressure on the stock market there, ladies and gentlemen. If we're looking at the CME exchange, probably not going to be much movement just yet because the market hasn't opened. But we can see some movement, not much, about 2% towards there not being a cut. But that's definitely something that will have more movement at 4:30, so in 45 minutes, when the market opens. So at the moment, very clear indications that the price is going to decline. If we go to our components as well, ladies and gentlemen, look at this. All of that was green. It's just gone all red. So very clear indications here of a decline. If we're looking at here, especially if we're looking at Nvidia as well, ladies and gentlemen, which was one of the biggest price drivers of upward price movement, Nvidia is down by 2.24%. Very low, especially for before the market has even opened. If we're looking at, again, the top 25 traded stocks, we have 1, 2, 3, 4 stocks only only four stocks increasing in value. So four stocks, ladies and gentlemen, we're looking at 16%. Only 16% are increasing in value. So we don't have any indication there that price is actually for the NASDAQ is going to increase in value. If we look at the Dow Jones, which definitely is going to see a very different type of price movement, most likely, in which case I'm wrong. We're looking at the exact same scenario. So this is definitely indicating a decline in the stock market, ladies and gentlemen, because we're looking at bond yields higher. They're still increasing even as we're speaking, ladies and gentlemen. The US dollar is also very high. It's 0.5% higher. And if we're looking at components, ladies and gentlemen, for the Dow Jones and the NASDAQ, which are very different. We're looking at the NASDAQ, which is highly exposed to growth stocks, very low yield, dividend yielding stocks. And we look at Dow Jones, which is more exposed to defensive stocks and very high yielding dividend stocks. Both of them are declining. So it's like there's no way of being saved in the stock market, for example. This is based on the current price conditions. Of course, we have to keep in mind, number one, when the market opens in the US, the stock market, we need to see how it reacts. And also, if it is reacting, there's that rule, of course, that it needs to react for at least 45 minutes in order for there definitely to be a specific type of indication there. So if we go back to the NASDAQ, ladies and gentlemen, so if we start off with very simply our 2 hour time frame, indications is that the price is going to decline. We've crossed to a lower low here, ladies and gentlemen. The RSI for the first time since the last time it was below, ladies and gentlemen, for the first time since the 4th of this month, so 3 days ago, that it was below on the RSI, was 3 days ago. So this is the first time since. We're below on the RSI, is currently at 47. So we've got indications there that the price is going to decline. We can look at our 75 bar exponential moving average, which is again and again honored every single time. So it was honored here, it was honored here, and honored here as well. This is our targets. Now, some people are thinking, how far away is that, ladies and gentlemen? That's another 0.34% away. So, very big price movement, which is still available for those individuals that aren't trading just yet. Because I can see a lot of people here are saying, sell gold, buy the US dollar, sell the NASDAQ. All these people that are saying this, especially based on what we're saying as well, we're seeing a lot of price movement in those directions. So hopefully we've got a lot of traders and the profits as well. So this is that. We switch over to a 5 minute, ladies and gentlemen. Based on the 5 minute as well, same scenario. Price is declining. We're trading and we're forming a downward staircase on the Bollinger Band. We're trading below the Bollinger Band, which is positive as well. The MACD is below. The stochastic oscillator is trading very low as well. We're looking at the RSI is oversold, ladies and gentlemen. But because of the volatility, we can look to significantly increase the period. Even based on the period, though, ladies and gentlemen, we're trading below 25. But we can see it's retracing. As it retraces, it will take us back. We're almost very close to going back into the sell signal rather than the oversold signal. As it increases, we will go back to that oversold signal, and we just did. There we go. So we're at 25 now, ladies and gentlemen. So we're no longer seeing an indication that it's oversold. In regards to somebody that hasn't traded, and by what I can see here, not a lot of people are trading. A lot of people that haven't traded just yet. When you're going to get a signal, you can potentially get a signal here, ladies and gentlemen. Now, if it retraces higher, ladies and gentlemen, if it retraces, for example, to here like this, like I said to the gentleman before, you can use your Fibonacci like this between the highest points of the retracement and the lowest low. In which case, if it drops below that 61.8, which is here, then you can trade what is known as the impulse wave and the continuation of the trend as well. Now, if we switch to a different time frame here, we can see The latest crossover is low, so we've got a low crossover here, ladies and gentlemen. Stochastic oscillator very clearly showing convergence. The next signal also, ladies and gentlemen, is when we're about to get a crossover, because we're close here to getting a crossover. So if we get a crossover, that can be used as a signal as well, because the last time we got a crossover, for example, was here. This was the last downward crossover. Somebody trading here definitely would be in a lot of profit, ladies and gentlemen. We would have seen some momentum against the trade, but as soon as the announcement was made, very clearly in favor of that price movement. And we're retracing here, ladies and gentlemen. So if people were unhappy trading this low, because the lower we get, the higher the risk of trading further lower. As we do this, it's basically giving us, like I said, an indication an opportunity to to speculate downwards, speculate the sell at a higher price. So rather trade at the breakout, trading here at the 61.8 instead, which is a higher point. I always say to investors, when we work with large investors and hedge funds, yes, they wanted to buy, but they wanted to buy at the lowest price possible. Yes, they wanted to sell and cash in, but they wanted to do so at the highest price possible. Whereas, investors a lot of the time, especially CFD investors and traders, they get sucked into the bad habit of every time it declines, we should buy. Every time it goes up, we should sell. And that's not always the best scenario. So at the moment, we're in a neutral signal. We got an upward stochastic oscillator crossover. As soon as that crosses back down, we've got a full signal for the price to decline. Now, before we go to looking at currencies, because this is the only thing left to look at, we've looked at gold, we've looked at the NASDAQ. Before looking at currencies, there's advantage because a lot of people want to speculate for sure the US dollar is going to increase in value, which is understandable. We can see here the US dollar is the best performing currency. Now, when I always say to individuals, and I got this from when we're trading on large trading floors. When we looked at these traders, they wanted a currency that wasn't conflicting. There wasn't a tug of war scenario. So we didn't have one currency increasing in value and the other currency increasing in value. Or they weren't trading exchange rates where both currencies were decreasing in value. Because analysis is much harder, momentum is much harder, there's a higher possibility you're going to see reverting price conditions as well. So a lot of people are going to say, what currency pair should we be trying to trade? Definitely the US dollar, a lot of people want to speculate is going to increase. But I will also say definitely there's benefits to trading the Euro USD because the European Central Bank cut only yesterday. And also a lot of people think they'll cut at least on one more occasion this year. But something very important, especially for short-term traders, it has the lowest spread. So it has that benefit. So a lot of people, yes, fair enough, they'll go straight to the Euro USD. But there is also benefits to trading the US dollar, but against the weakest performing currency. So maybe a lot of people haven't thought about that because it's avoiding that tug of war scenario, ladies and gentlemen. The only thing you need to be cautious about in regards to that is that it's not oversold and it's not going to retrace. Now, the worst performing currencies, ladies and gentlemen, is the New Zealand dollar and the Australian dollar. So before we go back to this, let's start by looking at the Euro USD because, like I said, it's got the lowest spread for sure. We can definitely see signals is that the price is going to decline very clearly. We're trading below the 100 bar simple moving average here and below the 75 bar exponential moving average. We're trading below the 50 as well. So we have clear indications here that the price is going to decline. We've also crossed below our previous sentiment line here. So we've got very clear indications the price is going to decline here. It has retraced upwards. That's better. That's good for us. A lot of people may think that's not good for us. It is good for us, ladies and gentlemen, because it allows us to enter at a higher price. So people on the 1 minute chart, they do have the option to trade here at the breakout. Or the other option, ladies and gentlemen, like I said, is very clearly we draw our Fibonacci line here, and you can trade at the 61.8 at this point here. Let's bring it slightly lower there. Okay, now people can also choose to scale in and scale out. So for example, here we've got two targets. Okay, we've got one entry, so this is target one. We've got a second entry here. So rather than opening one large trade, you can choose something which is known as scaling in and also scaling out. So this is also something that you can opt to do. Instead of opening, for example, one trade at one lot, at one price, at one time, you split it up into two. So instead of trading at one lot in one trade, you trade half a lot here, ladies and gentlemen, and half a lot here. Or for example, you can trade 0.75 lots and 0.25 lots here. So you're spreading the risk between two prices, ladies and gentlemen. Of course, you can trade put these slightly further apart as well if you wish. So it's an even more mitigation and spreading the risk. So that's something you can take into consideration. Now, if we look at other time frames as well, indications are also likely to be very similar. We can see here we're crossing below the 100 SMA. If we look at the stochastic oscillator, it's crossed downwards. If we look at the RSI, it's trading very low as well. Clear indications here that the price is going to decline. If we go to 15 minutes, we can see the latest crossovers here are also, downward crossovers. So this is also very clear as well, ladies and gentlemen. If we go to a 1 hour chart and we're looking at the Euro USD, we're still seeing indications here on the parabolic SARs that the price is going to increase. But of course, we've had some news, and especially if we're going to break below this level here, then we're really definitely not going to see the parabolic SAR indicating that. Stochastic oscillators indicating a decline. Also, the bar on the MACD is also indicating a decline as well. We're also very close to forming a downward crossover. So we're close even on the longer term to getting indications of decline, but not just yet. Now, as promised, there is advantages to looking at the New Zealand dollar against the US dollar because it's the worst performing. You can see some much bigger price movement downwards. For those individuals, we can of course aim for either the mean reversion points, which is more or less going to be somewhere here, ladies and gentlemen, or we can aim for that previous low, which is here. That's the most significant support level. What a lot of traders do, though, because it's more short term, is they'll trade and aims for slightly higher above it. Because even if we are aiming slightly higher above, ladies and gentlemen, for example, here, it's almost 0.5%. So for one day's trading short term, without incurring overnight risk, over weekend risk, any swap fees at all, or risk of a large spread, it's 0.40%, which is a lot of profit, especially for individuals that potentially may be trading with leverage. Some people may be trading with leverage, some people may be opting to not. That's completely down to you. But look at this momentum, ladies and gentlemen. If we're looking at the New Zealand dollar against the US dollar, so far today, it is trading uh, more than 0.91% in favor of the US dollar. So almost 1% in a single day. Now that's something usual that we see with the S&P 500 or with the NASDAQ. That's absolutely fine. There's nothing unusual about that. With currencies, that's unusual. Okay? So that's something we need to take into consideration. Price movements likely to be very similar for the Australian dollar against the US dollar. Let's look at that now. Australian dollar against the US dollar. There we go. Price movement is probably going to be looking very similar. Let's use this to take us straight to. There you go. So you can see it's very similar. A lot of downward price movement here as well. So for example, if I look at how much is declining here, we're looking at 0.87. More or less the same. We've also got indications here that the price is going to decline. Now, if we're looking at the British pound against Japanese yen, somebody's mentioned this. If we're looking at this setup, ladies and gentlemen, we currently have indications the price is going to increase. We're trading above both sentiment lines. We're trading above the 50 on the RSI as well. The only thing that I'm cautious about, definitely cautious about, is that we're at that sentiment, we're at that resistant point. So that is a concern. Okay. What I will definitely monitor is if I want to break this level, I would be going to a chart like this. You can use an alternative if you wish as well, ladies and gentlemen. But I would like to see the Japanese yen significantly declining against the whole market. At the moment, it is significantly declining against the whole market. The pound is also declining. I'll keep monitoring that, and I want the pound to be strengthening not against the Japanese yen, but against the market in general, and the JPY to continue declining. This today's news is definitely very negative for the Japanese yen, more than any other currency, because of its correlation and the safe haven status. So, ladies and gentlemen, let's end today's session because we've looked at bond yields, we've looked at components, we've looked at currencies, and we looked at bars like this to see sentiment. We've mentioned risk indicators such as the VIX, such as the high-low index as well. We've mentioned a lot of things, ladies and gentlemen. Let's see if this changed. Most likely hasn't changed a lot because, like I said, the market hasn't opened yet. It's at 50% exactly for September. Let's go back to September. It's actually increased, which is actually a higher possibility of a cut. Very slightly, because it's an increase and it's something very different to what is actually being priced in the market. There's benefits to wait until the market opens to see if that changes. So let's end today's session. If anybody has any questions, feel free to ask now. Otherwise, we can end the session today. Also, keep in mind, ladies and gentlemen, for those individuals that struggle with trading because they've never traded before, but it's something they want to do, keep in mind you have free access to copy trading. So you can watch traders and how they trade and what they're trading from all around the world, including from Latin America, from Africa, from Asia, even if it's somebody with a much, much larger account. You can see, I've got some questions here. You can definitely see that these individuals, they're doing something correct. They maybe have a lot more experience, and you can monitor them and you can copy them as well. So you always have this option. And if you do want to be trading by yourself, there's a lot of free educational material, including live webinars, live one-on-one sessions with an expert and an analyst like myself as well. Once you register to our platform. And again, all this is available to you for free. So just to confirm, the NASDAQ is going down. It is going down at the moment. It's retraced the last time we spoke. And like I said at the very beginning, as it declines, you have to be cautious that people won't start buying to take advantage of the lower price. And so keep that in mind. So it's retracing at the moment. In order for sell signals to again become active, you need momentum to start again so you can trade the continuation of that price movement. Which app can I use to check strong and weak currencies? If you type in FinViz on Google, you can use that as an option. There's lots of websites that provide it. Also, MarketWatch provides something similar, but you can use that as well. But there's many websites that provide just a pie chart of what's doing well and what's not doing well. So you can see if there's a strong sentiment, a low sentiment within the market, risk on, risk off, what's performing well, what's not performing well, so you can adjust your trades accordingly. So I can't see any more questions. So let's end the session. Trade safe, trade responsibly, as I always say. Enjoy the rest of your day. Enjoy your weekend. Next week we have many webinars. Every single day we'll have live market analysis as well on our articles and our blogs. So keep an eye on that. Also, you have free access to copy trading, so you can check traders, even very, very large traders from around the world. So let's end the session. Enjoy your weekend, and we'll see you again hopefully on one of our next live analysis or our next webinars. In the meantime, goodbye.